just like that, the FOMC has come and gone, and markets, well, they're slightly higher. We'll cover everything that Powell said and how the market responded, and we'll keep it brief here to preserve whatever's left of my vocal cords. As always, check out the links, hit all the YouTube buttons, and stick around until the end of today's show. I've got 4 additional trade ideas to share with you today that you won't want to miss. So with that, let's just transition easily into our SPY daily timescale here. In terms of the overall trend, it remains in the upward direction. We have highs, and we've pretty much just produced equal highs at the all-time high. As we know, this is the last major low in the trend count. This is a soft higher low because the hourly trend has not flipped to down, and that still remains the case. And therefore, the reason I really bring it up is if the market were to reverse off of this all-time high, if we were to get something that looks like this, I would still be a big proponent for trying to find a daily higher low at the moving average stack, the lower edge of the weekly expected move, and above the bearish engulfer highs. That level is unchanged. We've been talking about it for weeks now. It is 675. So if the market finds itself down there, then great. I'll be looking for buyers to step up at the moving average stack and all of the confluence that we just talked about, 675. Awesome. Does this really seem like a top priority? Not really. We got a strong close on the FOMC here towards the highs of today's trading range. It wouldn't be unreasonable to get some sort of resting bar perhaps tomorrow, a doji, an inside candle, then a breaking bar on Friday. I could see that being some form of continuation here out of this trend. If we just move in the upward direction, new highs possible, on the heels of this catalyst. I don't think it was the big fireworks event that everybody was looking for. If it was, I think we would have closed at a new all-time high on the FOMC today. But for the most part, undoubtedly, momentum is trying to return to the market in the upward direction. The trend remains in the upward direction. I think base case still stands here. The market is absolutely not bearish, but it's very difficult to pick your spot and get involved in the bull side. So once again, on the daily chart, this kind of check back here and a Brigade bolt to blue sky territories is fine. Continuation might be tough to chase, but then buying the pullback over the all-time high, previous all-time high at that point, 689, could be a potential higher low for continuation. And our target to the upside is still a range double from our first initial bearish engulfer down over here. That's way up here at 695. It's also the upper edge of the weekly expected move as we head into Friday. Let's take a look at the hourly chart and just kind of glean some other indications from the intraday action over here. I would just point out that stronger sellers are still not participating in the market. Take a look at the morning session from today. We undercut these previous lows, right? And for all intents and purposes, the sellers could not do anything with that undercut. Instead of trying to just keep prices pinned inside of this consolidation, you could see that there was this undercut, no lower high, and instead just kind of neutral ahead of FOMC, and then there's the break. So pretty straightforward, and once again, stronger sellers simply not participating. On the hourly chart, the trend will remain in the upward direction if we do get that resting candle I was just talking about from the daily perspective. Over 685, something like this is lows, higher lows generally here, and this would build out as an hourly higher low. From there, trying to look for longs, risk reward into the all-time high, and of course, Brigade bolts into blue sky territories, as we just mentioned, risk reward up to that 695. The only time I could really see a short here on this market still is if there's some sort of major failure at the all-time high. Let's say there's a rally attempt that fails sharply intraday, maybe something like 10:30 on Thursday, opening drive to the upside, failure back below, 10:30 comes around, we're building a bear flag back under 689. Maybe there's some degree of risk reward to retrace the thin structure move from FOMC, and you just kind of invert that, right? You'd be talking about risk here and reward back to the downside as a trade only, right? This is not like, oh my God, markets are going to crash and go to zero. It's a trade only to sort of establish the next potential hourly higher low at that magic spot. It's not really magic, but 685, the level we were just talking about. And from a very simple pattern-based perspective, what is that? Of course, if you just call this a double bottom, it's a neckline retest, right? Neckline retest, then you're back up to the high. The larger short in the market, in my view, is you have to turn all of this into overhead supply. You really have to get the market to fail here, build a flag, and then get this. And then what's the trouble with getting short underneath 679.50? I mean, yes, you have this thin structure retracement off to the left, but you're shorting straight into the major spot where on the daily time frame, I'm still more open-minded to a potential higher low. There's really no use for the Fibonacci's here. We haven't moved enough range to make it worth it. We could throw on the intraday anchored view apps just to check in. We're above all of them for whatever that's worth, but let's just take a peek. Above the entirety of the stack. If anything, I would just point out that this anchored view app from the Gap and Go, which really established this balance range, that's slowly over time going to start curling to become confluence with that 685, possibly reinforcing it as a major higher low spot to keep the bulls in control here. Let's take a look at our market internals. For the NYSE side of things, strong volume inflows on the Powell speech, advanced decline line moving higher, and the index score, index scores here did close double digits green, but I was meaning to talk about the cumulative build down here. It did build out positive, although because of the volatility, it's not really substantial. It's hard to read into that tick as being an end-all be-all. If we just jump on over to market profile, you'll notice that value did not shift higher with price. You can see the point of control is lower. That's simply a time-based thing. There was not enough time to bring the transactions, the point of control really, to this point here up and over 68.90s. And therefore, it really becomes a matter of tomorrow paying attention to the double distribution, which is K period here. As long as we're spending more time in the upper distribution, you could assume that that's bullish. If you go single print closure and bounce, that would also be bullish. What does that look like? It's also the neckline retest of that double bottom we were just talking about, right? So that really makes a lot of sense to me here, and that is probably the main takeaway from market profile. You could close the single prints from K period, support over the neckline, which is basically Tuesday's high, right? And you would be still establishing a higher low for trend continuation in the upward direction. If you really start failing that, that's where the market might become a little bit more bearish and concerning in terms of a failed breakout into blue skies. If we just jump on over to the platform here and continue to rip through, we'll quickly check in on our Nasdaq. I can feel the voice starting to get a little testy, so we'll try to keep it brief. Not as good of a move here in terms of taking out these highs. You do have a nice balance range that's developed. You're still just banging your head back and forth, playing ping pong inside of this range. So nothing moves until nothing moves, or nothing moves if nothing moves, and something will move if we can get out of this little gap range here over 630s. You've got to Brigade bolt out of that multi-day balance range. Over 630s targets the all-time high. That's great. But if you can't break it, then there's nothing to really do, just playing ping pong in the range. I've talked about this a number of times in the pre-market live streams. I hate the prospect of getting short the Nasdaq side of the market. You have too much demand here, which is kind of the midpoint of this range. Then you have the low end of the demand here. Then you have this midpoint. I hate the prospect of trying to short the NQs, or just the QQQ cash into this spot. I'm still bullish on the opportunity for a higher low here over the moving average cluster. And heck, we've been talking about this for a while. The overshoot of this zone, if the broad market's going to pull back in a more violent manner, which post FOMC doesn't really seem like the big outcome here, but we'll prepare for it with a back pocket. If we overshoot this, I would still be optimistic on the hold of 606, which as we know is the 25K spot on the NQ futures. So mostly looking at that, and then your higher low here would be the signal for me to actually initiate a long and put some sort of position on to play that as a higher low. Let's drop it down to the hourly chart here. See what else we can glean. You might be able to parse out a midpoint line in here around the 625.80s. I'm going to go ahead and dim this thing back so I don't over-index on its importance intraday tomorrow. If you pull back and hold that, you're staying over the Tuesday high, which could be seen as a double bottom neckline. That's fine. Once again, I would be less interested in trying to trade the middle of this range and more interested in trying to set up and stage the breakout that looks like this if we get some sort of momentum that flows into the market tomorrow. One thing that you can just easily watch for this is relative volume. How high is the R-vol off the open? If you're single digits in the first hour of the session, like ahead of 10:30, if all the R-vols are like 5, then there's like no reason to really be expecting a momentum breakout unless there's an intraday breaking catalyst. If by 10:30 you're starting to see like 20% of the average 20-day volume transacting. And by the way, we have a script for this. I don't know if it's going to be easy to pull up here. See if I can customize real quick. Let's just go RVol. There it is. Let's check that out. Let's go RVol here. Add. It's going to take a second to load, of course, but here you go. These are the numbers that I'm talking about right here. If these numbers are really weak, all it does is it averages the last 20 days of volume, and it tells you the percentage that has transacted thus far today. So today on the SPY, we transacted 103% of the average of the last 20 days of volume. Okay, so the point of the exercise is if we're going to try to look for momentum break, you got to have the volume to back it tomorrow with some sort of Brigade bolt up and over this 630 spot. It's really 629.75 as the full gap close and beyond. Once again, I hate the prospect of getting short into these lows. I hate the prospect of shorting into this, shorting into this, shorting into this. I knew I drew an arbitrary line on the daily chart, but that arbitrary line is a little bit more obvious on the hourly. Previous high acted as support, acted as the pullback low. I just hate the prospect of getting short in here. And could that bias itself, the unwillingness to want to get short in this consolidation, come back to bite me by a missed opportunity cost? That's fine. That is okay. If the market rolls over here, you can come back to the show and say, missed the short. That's fine, right? It's okay. You don't have to catch every single trade. I just feel like it's going to be a headache there. And it's not even like, yes, I feel like it's going to be a headache, but the market has proven that it is a headache to try to short anything on the lows. All right, so that's really my case for the Nasdaq, to be careful trying to short into that. It's more about pullback longs than it is to short this and become a hero trying to call a top. That's it for the Nasdaq. We can quickly look at the NQ side of the internals. You can see volume inflows very similar to the S&P 500. That's always going to happen on a FOMC day. We could check in on our market profile and just kind of get a sense for where those single prints are. Yeah, it's about the same. So same takeaway here on market profile. If we stay over Tuesday's highs, you're closing the K period single prints, and that would be a bullish high or low attempt. If you start to fail underneath Tuesday's highs, you're really balanced, and I would just keep expectations ground level low, really not looking for anything impressive out of this market. Let's go back on over to the platform, which is kind of unfortunate, right? Because FOMC, I thought it was going to be the big main event to kick off a little bit of momentum. I guess we'll see what tomorrow's follow through looks like. But failing back down to the midpoint of this range would just be like, oh, here we go again, right? Let's take a peek over at smalls. Let's go out to a daily. New all-time high here as the Fed eases rates, and in my view, really speaks more towards an accommodative stance to the labor market, which is going to mean lower rates if things start breaking. Also, we talked about the initiation of QE, right? And it's not explicitly QE. These dollars aren't hitting the economy. Stimulus checks aren't going out there. We're not expanding the available money in circulation. But in terms of stimulating liquidity in the overnight market for funding, it's certainly going to dampen some of the effects of maybe concerns about credit. So small liquidity boost keeps credit stress stable. It's just going to mean a lower probability of a crash, so to speak, based on that, which we saw. What was the name of the bank? It's not the SVB situation, but earlier this year, right? Not earlier, it was just a couple of months ago, maybe a month ago. Those auto loans that were going belly up, people collateralized the loans poorly. And JP Morgan was like, where there's one cockroach, there's more, right? That was Jamie Dimon's comment. So you can correct me about what bank that exactly was. It wasn't First National, but something. Anyhow, those risks have been decreased now that Jerome Powell is operating in the overnight market, providing some liquidity there. Anyways, IWM small caps responding favorably to this, breaking out, getting momentum in the upward direction. Bottom line for me is that your broad market, the S&P 500, is not going to crash if the IWM is going on to produce a brand new all-time high. You can clearly see the prior highs back here make for a very obvious Brigade bolt spot on the daily. That's over 250-275. If you pull back, I would still be a big proponent here as well for a higher low, which is over really this previous resistance, which can now act as support. 248.25, we've talked about that quite a bit in the morning sessions on this type of move that happens like this. If we were to pull back into it, I would primarily be less interested in shorts. Again, you could try a scalp here. There's nothing wrong with an attempted scalp underneath these lows for something like, we consolidate here. This is a failed breakout. Maybe you can scalp A to B, but at point B, it's absolutely about using previous resistance as potential newfound support. Once again, that's 248.25, maintaining a little bit more of a bullish bias here on small caps with the breakout and the accommodative stance from the Fed. Let's jump on over to small caps on the internal side. We're looking pretty good here. Volume inflows, advanced decline line, cumulative build positive. No big changes. Nothing divergent from what we've already talked about here. Single prints are over the previous all-time high. If I just scrunch this up a little bit, I don't think we're going to be able to see it on the futures. Yeah, no dice on the futures. Oh, there we go. Not bad. Not bad. All right. Those single prints are right around in here. So that's your previous all-time high right there. As long as we're over that, we are good to go. So it just aligns with those single prints, once again, really aligning with, on the market profile, all of these key areas that could potentially act as higher lows. Notice that the point of control did flip higher on the Russell. That's fairly typical of the Russell. The market on close orders here are typically larger than what happens in the ES and the NQ, and will allow that point of control to flip higher. So nice to see that the volume commitment is being made up at the new all-time highs. Pretty solid for the rut. Let's jump back over to the platform here. Let's take a look through our sectors briefly. We'll talk about the performance first, and then we'll look at the actual charts. In terms of risk on, risk off, SMH leads the pack. That's risk on. Followed by energy, a little bit more neutral there. XLK is a leader as well. That, of course, is going to follow suit with the SMH. So bullish and risk on based on posture here in the top three. The bottom end of the barrel, it's utilities, real estate, and healthcare. All of those are slightly more defensive, if not just really lightweight sectors that aren't going to move the needle all that much for the market. As we take a look at the actual structural charts themselves, SMH, brand new all-time high. Remember when everybody thought the world was ending because we had this lower high threat here? And, rightfully so. We did make a lower low in here, but the snapback has been so aggressive and just nonstop where it's hard to have a bearish stance. So if a pullback is going to occur, that's fine. This consolidation keeps me neutral to the broad market. The only time I think the broad market overshoots to that SPY 675 spot is if the SMH takes out 360, 365. If we do this, you're probably talking about, sure, a higher low opportunity, but absolutely pressure for the broad market as a whole. Let's keep moving here. Energy, not much to talk about. We'll keep it brief again in the interest of the vocal cords. XLK looks all right, trying to advance. Does have this unfilled gap above. Consolidation would be ideal. And then continuation, if it does pull back, you got to stay over the engulfer high. That's going to be 143.75. Remember, post-split, you should update your levels here. Let's move along to industrials. No comment. Looks bullish for an all-time high break. XLY, I'd like to see an all-time high break. That would help out the Tesla argument as well as Amazon. I do like the higher low hold here at 118, so I'll give credit where credit is due. Buyers stepped up, allowed for some upside. Doesn't look like a half bad chart. If we look at XLB, it's the lightest weight sector in the market. Not overly concerned about this. A little overshoot of the neckline from the double bottom. No comment. Let's just save the time. XLF is the second heaviest weight sector, does look good. This is a solid recovery back up towards the highs after the debacle, really from JP Morgan in isolation. If you just take a look at the big breakdown from the Tuesday session, they basically made note that customers were a little bit more discerning. The market didn't like that one bit, but nonetheless, strong rebound today. And with Jerome Powell offering up some potential relief in the overnight funding markets, maybe that's going to keep these banks moving in the upward direction. So the XLF as the second heaviest weight sector really doesn't look all that bad, right? Potential higher low here. The next big step is, can we go out to break and make a new high here over this 54.50? So that's what we'll be monitoring for as the second heaviest weight sector. As I've said probably too many times now, it is just a continued tension point with the XLK, and as both of them continue these new uptrends in the upward direction, it really speaks to probably not being bearish the S&P 500 and looking for higher low opportunities or just straight up continuation. Let's move along to the TLT, kind of stabilizing in here. I haven't really found enough implied volatility on the options chain to want to sell puts under 85 yet, so kind of hanging tight on that. We'll talk more about the Fed in just a second. If we look at the XLU, it's rolling over big time here, but it's such a lightweight component. It's not overly concerning. It's also D for defensive. So, we've seen the rotation happen. Excuse me. We've seen the rotation happen. We've seen the rotation from utilities leading back here, passing the baton back over to financials and tech now after these consolidations sort of resolve. It's not horrible. I'm not overly concerned about this XLU rollover. Real estate, really not as concerned about this. Jerome Powell in the press conference today saying, the Fed doesn't really have the tools to help the real estate situation. It's a supply issue. There's not enough homes online basically to go out and satisfy demand. So of course prices are going to be elevated and there's going to be a housing affordability crisis. That's just the way it is, right? Unless you build new houses and put more supply on the market, it's not going to correct, right? He mentioned, of course, the lock-in based on previous rates being at 2%. If you got a 2% mortgage, of course you're not going to sell, right? Why would you sell? You've got free money on your hands. So that was kind of interesting just in terms of tying that back into the commentary today. XLV, nice bounce off of this 150.25. We've talked about this weekly for a little while now. I'm still mostly interested in building out a handle up here. Call it a cup and handle at some point. That's fine. But you're due for a little bit of consolidation after this huge move on healthcare. I'd love to see this build out on the weekly, right? Everything's fractal. Just like you want a daily high tight flag to participate in, you could participate in a weekly high tight flag on XLV. You're not going to get this type of just clean flagging action forever. That's just going to go on for infinity, right? So as long as 150.25 holds, we're holding the previous weekly pivot, and that would build out a nice flag up here. I think it might be ripe for a little bit of an oversold bounce, but I would sort of expect some consolidation, like maybe a week, not a week, maybe a weekly flag to take a couple of months, to build out, and then we deal with it when it exits its next major range that it develops. That's just typically how charts work, right? They go from expansion to compression back to expansion. In that case, it's the inverse for the XLV. XLC, let's keep the voice in check here. Let's try some warm tea, and then we'll keep going. Very rare that you get the non-live stream sip of tea. But anyways, for the video recording, the midweek, we're getting the job done. XLC, nice high or low here. I would love to see this build out and possibly flag up and over the 117.20 into the end of the week. You really haven't done much in terms of range expansion this week. Monday sell and then just balance inside of that Monday range. So if we are going to go for a break, if there's something meaningful going to happen, it's probably this, right? And that's just a simple range, where's the next leg to do this, right? Get to the all-time high. Let's keep moving. XLP, final sector on the watch list. This is where I still have some concerns. Generally, the trend is more down on the higher time frames. You do have daily inverted head and shoulders as a possibility, but of course, you have to break the neckline. I don't think it's enough of a threat to really shut the market down and say like, oh my God, we're going to zero. So the quick sector watch, in my view, supports the idea of continuation or pullback longs being the name of the game. If we look at the sector ratios, we look okay now over the upward sloping 50 on the XLK ratio. XLF is more so sideways. I'd like to see this curl higher. I would like to see XLC curl higher. I'd like to see this curl higher. So I'd say this is neutral in terms of risk on, but we're not risk off, right? We're not here and we're not here. If we jump on into the A set, most of this is improving. Big improvement over here with the notable new higher high on tech versus utilities. This is getting better. This is getting better. This still has some work to do, and this still has some work to do. That's kind of how it's been postured for the last little bit. Main illustration, once again, is that it's not risk off. If we were to say anything about these charts, they are not risk off. They lean more risk on than anything. It's a matter of being tactical with your entries on the long side as we continue on here. Gold chart as a ratio, not really doing much for us to read into. Gold has a little balance we could talk about in a moment. Bitcoin, the digital gold, trying to lift here, but still just in a bear flag on the weekly. Hard to say anything other than that. TLT ratio does signal risk on here down below as well. Let's get into our dollar. Dollar saw a nice downtick today on Powell basically saying, yeah, we're going to support the labor market more so than anything else. So although Jerome Powell in his commentary, you kind of had to read between the lines, I suppose, a little bit. Let's get on over to that inverted ZT, slightly lower over here, rate cuts, and let's just go on over to the Fed Watch tool. Let's open up, I think I have a whole different task for it. So your odds your odds for a cut in the next meeting, which is going to be on January 28th, for a pause, is 77.9%. And Powell basically admitted in the conversation today, you probably don't want to be thinking about hikes as we walk forward from here. Pause seems very reasonable. But if there's any weakness in the labor side of the situation, we will be willing to respond to that, right? Where you had to read between the lines is when he said something along the lines of, we don't want monetary policy to weigh on the labor market, right? That was what he was saying, basically. And the issue with the labor market, and I sort of thought this was insightful from Powell, it was very kind of him to share, but the Fed basically revises every single labor report we get down by 60,000 jobs. Every NFP report gets revised down by 60K. So instead of thinking, oh, wow, we're just kind of floating around neutral with maybe a 40K on the actual release, the Fed sees that as less than neutral and more like we're actually losing in a big way. So to be supportive of that, it wouldn't be shocking if we get a weak labor report that these odds actually bump over here for another 25 basis point rate cut. And of course, you're going to have Mirren pounding the table for that, who wanted a double cut today. There was a little bit of a dissent if we look on over at the statement tracker. Let's scroll to the bottom. Mirren here wanted a 0.5 percentage point cut, and then Goolsby and Schmid preferred no change to the target range on the federal funds rate. All right. Here is the updated SEP, which was also released. The most compelling part here, in my view, is the revision higher for the GDP on the 2026 calendar year. I mean, that to me is a sign that the Fed is like, hey, we're expecting decent growth. We don't have to step in and support it all that much, especially with a unemployment rate that was unrevised. Now, I think that's a little bit suspect there. I think that the Fed is pretty much just unwilling to admit, sorry for the sniffle, unwilling to admit that things might get a little worse. They don't want to maybe scare the market quite too badly. So keeping that at 4.4 while also putting GDP higher and then keeping rates unchanged, I don't know. I think you keep rates unchanged and you'll probably get a little bit more softening over here. And the other component to this, right, is that Jerome Powell certainly acknowledges that AI as a component, it's going to reduce jobs, but it could probably add new jobs. It's just a matter of the timing of that cycle. The final thing to talk about from the SEP, as well as just the commentary from Powell today, is what's going on with inflation. Inflation from tariffs is really, and Jerome Powell really, I think he did a good job of trying to delineate this in the actual meeting, where he was saying goods inflation has sort of unwound any of the progress that was made on, or not any, but some of the progress made on services inflation. And once we see goods inflation settle down from the tariffs as a one-time price shock to the level, that should be about 9 months. That was his rough estimate, and he said, don't quote me on that. But that brings us to about Q1 of 26, right? So on Q1 or in Q1 of 2026, we should start to look for inflation data to normalize. And Jerome Powell says that it actually should be closer to 2%. If you take out the inflation data based on tariffs, goods basically, will be closer to a 2%, which is the Fed's target, right? So that is the way that this was described away. And generally speaking, the bottom line of the entire FOMC moment today was, I saw it all over the internet. Everybody was talking about, we've got to get this hawkish cut, it's got to be a hawkish cut, right? He can't cut rates and then, talk up dovishness. I think the market was much more dovish than everybody was expecting. And that kind of can, give us a little bit of insight as to why we moved higher. Anyways, I don't want to spend too much time on the Fed. I want to just quickly rip through the remainder of the supporting evidence. Then we'll move on into our core charts, and we'll wrap this thing up. In terms of this chart, which is the bond chart relative to duration, as long as this continues to move in the upward direction, the market's calling the Fed's bluff a little bit on inflation. I think that you see the biggest moves in this when we start seeing commentary about Hassett being the new Fed chair, which, as we know, Hassett was a proponent for a 50 basis point cut, of course, very similar to Super Dove Mirren, some of the installations, if you will, from the latest administration. So maybe a little bit of bias there, regardless of what Hassett says on a CNBC or Fox Business interview, saying, oh, no, totally unbiased and apolitical. Okay, that's the bond relationships. Let's go on over to the credit spreads. Flat here. Risk appetite seemingly unchanged. A little bit of a downtick on the actual today session. Let's go to the HYG. Nice push to the upside here. Just if you compare it to the SPX, though, you're not even close, right? You're not even close to these highs. You're just majorly divergent. Of course, the dividend payout over here, you could maybe compare that this high to this high is equal, just like the S&P 500 will be okay. But in the grand scheme of things, junk is still saying, hold your horses there a little bit into new record highs. I'd like to see, if this is going to be confidence into blue sky territories, let's at least see a move up into these highs on junk, closer to about 81.23, 81.24. Somewhere in here. All right, so that is your junk bond side. Let's take a look at breadth again. Sorry for the sniffles today. Trying to dodge this sickness the best we can. A little bit of breadth improvement, which is to be expected on a dovish FOMC. If we jump into the RSP, broadening out over here makes sense as well. QQQE, similar situation it looks like, continuing to move in the upward direction. All set when it comes to breadth. If we look at volatility, getting crushed today, that's to be expected, and your one-day VIX is the primary explainer over here. Let's go over that exactly now. Everybody ramping up, putting on insurance ahead of FOMC, only to have the more dovish Powell versus the more hawkish cut that everybody was thinking about. So you unwind those hedges. What does it do? Makes it easier for the market to drift in the upward direction. So all set when it comes to the supporting evidence. There's no major red flags. The market continues to display a little bit of a lack of momentum, but we'll see if that changes tomorrow. Once again, please pay close attention to the RVOLs early on in the day if we're looking for any type of continuation. NVIDIA, really tough chart, really tough here. Pinched between the moving averages, failing the breakout level. Couldn't do anything with the H200 news on Monday. I hate this chart. I would stay far away. There's nothing to do on NVIDIA, so let's just save the time. We'll move along to Apple. Apple, on the other hand, looks great. Daily 20 hold, 3-day balance range here. Over the highs, I want longs, targeting the high in here. So really just trying to keep it simple, looking for that uptrend, lows, higher lows, over the daily 20, inside candle-esque, right? Really just a balance range here. If you can break the balance, show me the love over something like 279.50. Let's rock and roll towards the all-time high. If we look on over at Microsoft, not a great day. Excuse me. The only headline I could see here on Softy was the India investment, so maybe CapEx continuing to be an issue for markets. CapEx, let's just spell it out so I can just satisfy my brain and give it the opportunity to see the full word. So the double bottom's out of the table here, or off the table, I should say. After what was looking like a beautiful inside candle on Tuesday, it was a picture-perfect setup, just destroyed this morning via the gap down. So as of right now, I've got to take this in stride and just say, does this hold? Does this hold at 476.60? If it does, then great. Maybe we build this out over time and it turns into a range break, but no longer do we have just simple double bottom inside candle break of the neckline. So for now, just watching closely 476.60. If we start to fail the daily 200, got to pack up shop. Microsoft losing the daily 200 is just bearish in general for the market as a whole. Let's go on over to Amazon. Excuse me. Amazon, nice follow through over the moving averages today, closing up at the high. Looks far better than Microsoft. So here you've got this daily Brigade bolt. Love the 227 hammer. We talked about this in the pre-market prep. Long over the hammer, high continuation to the upside. Awesome. No problems with Amazon. Happy in the swing shares here. Little concerned about the Microsoft. Apple doing all right as well. So on Amazon, I'd like to just see the follow through. Where are we going? This 238.75 is what I'm looking for. Let's keep moving. Google, I like the bull flag on the daily chart. Big reclaim after sort of being very sloppy, I would say, on this 314.60. If we could stay over 318, that's the new sort of line in the sand I've built out for it. If we could stay above, zoom. If we could stay above that, I would start thinking about rotations towards the top end of the range. That's really it. If it does start to fail, more interested in longs out of the gap close to the downside for upside, if that makes sense. Gap close to the downside for then follow through to the upside. Higher low here on the daily chart would be supportive of the 20 SMA, right? That looks good. Google is a leader here in the new AI world. Broadcom, another one that's a leader. I would stay away from this, just noting that earnings are tomorrow. So pause on the Broadcom, but it does look bullish. There's no issues with this daily chart trying to move out of this range, getting some follow through in the upward direction. Just need to get through earnings for new actionable longs or shorts for that matter on the options front. Metaverse, what do we have over here? Spinning top, doji-ish bar over the prior highs in here. If we could support it, then fine. If we can't really support over these highs, and we start to lose this tomorrow, I would just sort of be not interested in Meta. I've got no position on this one. This is the one I was unwilling to swing because of the daily 200. So if you could prove to me a higher low and do something like this, short proximity of time, and then break into the earnings gap range, maybe. But for now, it's just kind of a pass on Meta. I'm really not fond of this chart at all. Let's go on over to Tesla, a chart I am fond of. Looks good here over the daily 50 after making an advance out of this range down below, trying to hold up in this previous consolidation. I like this. Can we get some sort of Brigade bolt tomorrow up and over 456? That's the name of the game. On the hourly chart, looks pretty good here. Consolidation is in service to that Brigade bolt, and over 456 targets 470.75. Moving along to JP Morgan. We talked about this a little bit already with the snapback. Not much to really do on JP Morgan until we're over or under this range here. So patience, a lot of patience. Maybe leans a little bit more long in the upper 50%, but nothing to actually do yet. Let's take a look at Palantir. Great trade today on the gap fill reversal, one and done before FOMC. Can't ask for anything better than that. Next steps, stay out of the junk drawer, please. Do something that looks like this. That would be constructive. If we do fall back down into the junk drawer, I'd like to see a higher low develop over the 50. If we drop it on down to the hourly chart here. All right, so this is ideal continuation. This is like build out some structure and then prevent the head and shoulders, right? You want to avoid this. So your 50 SMA is really just going to be the line in the sand. It's kind of that simple here on Palantir in the short term, and those are the numbers that we're sort of navigating to the upside. I would like to see this and lift. If we do get this pullback, show me the structure and then show me this. Avoid the head and shoulders, and we'll remain bullish here. I suppose ultimate line in the sand is just the junk drawer low. I would prefer for it not to go all the way back there, because then, of course, this lower high, that's a lower high I would short up against the daily 50. Let's move along to AMD. Terrible looking chart. Nothing to do here in this compression. I'm still fond of this 214.35 breakdown for a short. I just don't think it's going to play with the broad market pressuring all-time highs. So the next step here is, can you show me the move here to just get back into the overhead supply and prevent, right, a big weekly lower high for some sort of Brigade bolt like this and then this. Avoid this situation by proving the higher low over 226.65. It's really that simple there. Let's go on over to Robinhood, another chart that in my view probably leans a little bit more bullish, but is a little sloppy. Reason I say that is that the previous day's high, Tuesday, is a look above and fail, right? Failed breakout back in the range. You're holding the daily 50, a little sloppy again with that wick, so I'd prefer to try longs over those highs again rather than shorts, but taking it one step at a time on the hourly chart, you can start to see this, right? If this was going to go, you should have held here, or at least you should have recovered here on FOMC and set up this move into tomorrow. So in the short term, some concerns of, kind of this, left, head, right. All right, that is your core list of companies. Really trying to speed it up here to avoid too much vocal cord damage. Let's go to MU. MU. Looks okay, blue sky territories. Main reason I wanted to bring these charts up is to just indicate that it's not all about NVIDIA. We know that NVIDIA is a laggard. We know NVIDIA has really sucked recently. It is not performing even with catalysts, but look at MU. Looks real strong here in the upward direction. So with that sort of in the backdrop, I don't think that the AI trade is over. Okay, that's MU. Next up is TSM. Wanted to bring this up for the same exact reason. I know there's a lot of lines on the screen, but bear with me. This is an all-time high break. Couldn't close above, but this has been a nice ramp here. If we can consolidate into a flag and continue, looks pretty good out of TSM. It's not one of the major ideas. I still have additional ideas for you. One of them is going to be AMAT. Let's start with AMAT. AMAT has this really clean break of the all-time high. Consolidation here, blue sky territories. So I'm interested in AMAT. I just wanted to show you those other two semiconductor-related names first. This is a new leader in the AI space. This is the previous all-time high. This is when we were talking about NVIDIA being dead, post-earnings and whatnot, and this is one of those new pick-me-ups. So AMAT holds over 271.95, are bullish for blue sky breakouts. If you pull back here, I would still like the long opportunity at 255.75. That's AMAT. Next up is going to be WDC, which is also a memory-related name. Looks good like MU, of course. But look at this break. I just think that the next watch is here. Can you hold up over 177.75? Do you get pullback higher lows here? WDC, really great looking chart out of this 2-day doji back-to-back. Nice break and follow through, brand new all-time high close. Looking for the next higher low. Do we get this? Do we get this? Okay, that's WDC. Next up, Walmart. Walmart, maybe not expected, but Walmart. Underneath these flag lows, I think that you could get a pullback here, and that would be a long possibility. 109.50. Do we get Walmart longs at 109.50 and look for upside? It's possible. XRT theme has been pretty strong, right? We know that this break has been underway. Not that Walmart is like the poster child for retail. Maybe you could use Kohl's or Macy's or something like that, but it's pretty darn good. The chart setup is great because it's all-time highs on Walmart. Right, these are all-time high blue sky territory levels. So pull back here, solidify this previous area of resistance as newfound support, and potentially rotate back to that high. That's Walmart. Next up is LMND. Disclaimer, I already own a position here. So take my biased analysis with a grain of salt, but I love the daily hammer. I love the possibility of a break to the upside. This chart has been structuring really, really nicely ever since recapturing the IPO opening print. Nice build out of a range, big break, nice build out of a range, looking for that next big break. Is it in the upward direction? I'd prefer it be that way. I do like this higher low sequence coming into these equal highs. If we're up and over the top, we're looking at, what's the next level? Let's just search for this together. Let's go out to more than 3 years, I guess. Next major level over this high is going to be up around the 90s. Up around 90s on LMND. And then, of course, the obvious resistance around 112 would be the next major spot. So just rough data points for the upside. I'd take this day by day and just, sort of babysit it one step at a time as and if it breaks up through these highs. What's the number? I'll get you the number here. I'd be looking for the break up and over 80.70, 80.7. Up and over that, good to go. Clearance, looking for that. Okay, once again, disclaimer, I own a position there. Take that analysis with a grain of salt. AA, what's going on with Alcoa? Aluminum looks pretty good. High tight flag here, bull flag. Over 44.75, that's going to trigger a Brigade bolt long perhaps, and our target to our left is going to come from, let's go back over here. What do we have? What are these exact highs? I would start thinking about 47.63s, 47.65 we'll call it for round numbers sake. You guys know me up here in the office, round numbers only. And that's it. That's it. We're going to wind it down on that note. Maybe a larger base break if this really wants to go on aluminum. I wouldn't be shooting for that just based on the daily setup here, but it's something to carry forward if you're really going to get attached and sort of interested in this AA trade over the span of time. All right. So that's it. Let's wind it down on that note. Appreciate you coming out to the show on a long day. I mean, geez, pre-market prep, morning trading session, Powell, FOMC, and then an end of day recap. Hopefully you had a fantastic and green session. Keep it green out there into the remainder of this week. Remember, markets are bullish. It doesn't mean that there's not necessarily momentum yet, but still bullish. Would be hard pressed to be a bear here. I hate the idea of getting short prematurely. Still thinking about daily higher lows or continuation on the broad market. With that, have yourself a green and prosperous rest of the trading week. And as always, I will see you in the next one.